balance transfer from a different Chase account to that different Chase Freedom card. And from the bank's perspective, this is important. They don't allow that because they don't want you to finance off a balance that they already have you on in another card. All of the major banks will only allow you to use balance transfers on a card from another bank. And the idea here is they want to use those balance transfer offers to lure you as a customer to come into their banking ecosystem. So remember, in order for balance transfers to work for you, you've got to have two different issuers at play. And finally, almost all balance transfers have a limited time transfer window for you to transfer the funds to receive the zero APR. Usually this is 30, and in some cases as generous as 60 days. All of that adds to your time margins and deferred payment opportunities. So, because the two issuer rule is so important, and I've seen so many people make mistakes on this and not be able to utilize the value of balance transfers, we're going to go into it in a little more depth. So we have two examples here. Example 1, where a balance transfer works, and example 2, where it doesn't work. So in both cases, I have that current balance on a Chase card and a Citi credit card respectively. In the first example, I opened up a balance transfer account with Citibank. And I'm going to transfer my Chase credit card balance to a zero APR credit card balance Citi card. And that balance transfer works. And it works because Citi and Chase are two different issuers. In the United States, that's usually banks. And that's how you know you're safe. In the second example, I have a Citi credit card balance, and I want to transfer that to Citi. And that's not possible. And the reason there is the issuing bank is the same bank. And this works if it's both personal or business. The issuer has to be different. Now, remember, in the US, there's a few major issuers. So it's Bank of America, Citibank, Chase, American Express, Discover, Wells Fargo, Capital One, and US Bank. Those 7 are probably your biggest bets for balance transfers. Make sure that it's 1-to-1, never the same. This is one of the key areas where people make mistakes and they end up either not being able to use the balance transfer, they open too many cards, or they end up thinking the whole thing is futile. Don't make this mistake. So let's take a quick look at some tips and tricks around balance transfers. Because for banks, this is a great way for them to make money on you. And by using these tips and tricks, we reduce the amount they make on you to basically zero. So it's important to set these up as a system. So when you initially set up a balance transfer, let's use the invert rule, which allows you to set up automatic payments for 1 month less than the offer. And what we're trying to avoid here is any retroactive interest that is applied if you don't pay off the full amount by the end of the promotion period. So always remember, amount divided by the offer in months minus 1. This way, there's no chance that you're going to get hit with retroactive fees. And these fees can be a lot. So by using the invert rule, we're adding a system that turns balance transfers from a marketing tool for banks to an effective and free cash flow tool for you. Another tip here, always add your promotion ending date to your calendar. You need to know when the balance has been transferred in, and you need to know when it needs to be paid off by. Having it in your calendar gives you a system to check. And finally, remember that the promotion period on a lot of these credit cards starts when you get approved from the card, not from when you receive it. So often this means you have to factor in another 7 or 10 days for the credit card company to actually process and send you out the credit card and the balance transfer offer. So always remember to subtract that time and add it into your calendar. So a couple common mistakes I've seen when setting up balance transfer cards. Again, the first and major issue here is not having two different issuers. I've seen a lot of people get really frustrated with, oh, why won't this work with my bank? The key thing is make sure you have two different issuers. The same bank name should not appear on that balance transfer line. Another key thing, a lot of people think that a balance transfer is just a fund and I don't have to pay anything for 18 months. That's not true. One of the terms and conditions of balance transfers are that you have to pay at very least the minimum every month to be guaranteed that 0 APR over the life of the promotion. So this is why the invert rule was created, to make sure you're both paying the minimum and ensuring that there's no chance you're going to not finish the balance by the promotion period. Really, really important that you still set up automatic payments. And finally, balance transfer tools and credit cards are a support for your business's cash flow. They're not a luxury spending tool. And on the individual side, I see a lot of individuals use them as a way to defer payments on luxuries. And Warren Buffett has some great comments here about credit cards being financial weapons of mass destruction. Really, the big thing here is use these tools responsibly. Balance transfer cards can be a fantastic tool to help increase payment terms in your business, but they're for productive assets, not for luxuries. So I want to walk you through an example of how I combine rewards cards and balance transfer cards to get better payment terms on the things I buy for my small business and have helped small businesses do. So across the top, you're going to see business expenses, business card with balance, and then finally the balance transfer card. So in this example, I had that $10,000 of training cost. It was a needed expense. I spoke with the vendor. There was no deferrals, right? There were no other payment options I had. From the date I received the invoice, I had 14 days to pay it in cash. So then I decided to pay that with Plastic, which is that credit card check writing service, on my Bank of America business credit card. Now, that business credit card earns 3% cash back on business services. That service costs 2.5%. So just there, I've earned 0.5% on paying for things that my business needed. Now, excuse me, that's a timer telling me I'm slightly over time. Just those two things has given me 39 days of time to pay. 25 days from the credit card, because from any payment I have 25 days from receiving the statement until it's due, and 14 days on the original payment terms. But here's where balance transfer cards get really interesting. By transferring to the Citi Double Cash credit card here and opening a new card with a 12-month balance transfer, I get an extra 365 days of payment time. And I get that for a 5% balance transfer cost. And remember, both the digital check Plastic service and the 5% balance transfer fee are both tax deductible for small business. By using that balance transfer card, I get 9.35 times longer in days to pay for my bills. Now, my cash disposals are now done monthly at much smaller amounts, allowing me to conserve cash in my business. And many balance transfer cards offer an 18-month payment time. That's 14 times as long as doing the 14-day payment terms and using a credit card alone. That is a huge advantage for businesses on good times and for times right now when we're really uncertain about what's happening in the economy. That makes the difference between businesses that can stay open and businesses that ultimately close. So remember, 9 and 14 times longer payment terms. This is a huge resource for small businesses. So a few comments here on balance transfers. I call these the 10 commandments of balance transfer cards. Because again, these are tools, and I want to make sure that you guys have the skills, mindset, and behavior to handle them responsibly and to use them responsibly for your business. So again, the first thing, always have 2 different card issuers. Remember to always pay your minimums. Always pay off the promotional balance before that promotion ends. Remember to use the invert rule to help you there. Put the ending date of the promotion on your calendar. Schedule it. Always schedule automatic payments. Schedule those automatic payments by using the invert method. Remember, amount divided by payment period minus 1. That way you'll never get hit with deferred financing cost. Businesses, keep copies of your balance transfer fees for business deductions. These are deductible costs. Always get rewarded for what you spend. Remember, the standard rate for any purchase should be 2% and 25 days. And you achieve that by using a digital check service and a standard 2% credit card. Remember to call your credit card company and ask if you have a balance transfer offer on an existing card. That way you don't have to open up 3 or 4 different credit inquiries. You already have those lines, and the credit card companies want to help you stay in business right now. And finally, balance transfers are a tool to help finance and support your business. I've seen individuals and businesses who start to use them to buy luxury items, and that's not really what they're used for. They're in this moment. These are a critical tool to help businesses stay around until federal and state help reaches you. This is a tool for productive assets, not for luxuries. So let's quickly touch on a few of the best balance transfer cards out there. I do not have referral links. I am doing this to keep small businesses like me operating, and consultants who can use this. I recommend going to creditcards.com and clicking on their links. They do a great job at aggregating this information. But a couple ones I want to highlight. The Chase Slate balance transfer card is awesome right now. Chase has a 524 rule. So if you've applied for a card for more than 5 credit cards in the last 2 years, you're probably not going to get a card with them. If you haven't, it's one of the first places to go. They will have no balance transfer fee on a 15-month 0 APR offer. So that's a great way to start. 0 cost to you, 15 months free financing. If you need something a little stronger and you need a rewards card for your business, the Citibank Double Cash is a great card. You get 2% cash back, 1% when you buy an item and 1% when you pay it off. And it comes, when you first get the card, with an 18-month balance transfer offer. Great card, great customer service. The Bank of America Consumer AmeriCard and Business Rewards Card both offer a 15-month balance transfer offer. Bank of America offers a 3% balance transfer fee, so it's one of the lowest. And finally, their business version of that card has a unique feature that offers 3% cash back for all business services. So this fits training services. This usually fits a lot of digital vendors. Anything that is